Well, all right, all right. Happy Monday to all of you. Lots and lots going on in the market. I'm going to go fast. Feel free to hit pause, read the slides, but there's so much going on. I don't want to take 10 minutes of your time. So here we go. We're going to start out by showing you what's going on with the markets. So those two green peaks that you see highlighted there, that is Thursday of last week and Friday of last week. Big rally, right? Now, why did that happen? I'll show you in 2 seconds. So on Thursday of last week, there's an announcement that says, hey, they're going to go out and spend $1.5 trillion on the military in 2026, currently at $901 billion. So essentially adding $0.5 trillion to, that's $500 billion, by the way, to the national debt in order to pump into the military. That upset the market because that's inflationary and that's borrowing money in the future. Shortly after, the very next day, Trump announces that, hey, Fannie and Freddie have about $200 billion in their coffers from the fact that they weren't sold during the pandemic, and he's going to use that money to buy back mortgage-backed securities in order to essentially do quantitative easing. Yay! So that's when you get these rallies here. The Thursday rally, where did the mouse go? The Thursday rally, as well as the Friday rally. This was a huge pickup. It was great. Now, here we are today on Monday with that little red blip. Why is that? Well, unfortunately, last night there was a federal prosecutors opened a criminal investigation against Jerome Powell and the Fed. I'm going to leave it up to you to go and research that and figure out what that's all about. And we'll move on with the rest of our report from this morning. So, what's interesting about that is I want to put the expenditure into perspective for you for just 2 seconds. Say I was a great guy and gave you $1 million and said, hey, go spend 10 grand a day. That would last you 100 days, right? Now, if I gave you $1 billion, that would same $10,000 spend would last you 274 years. Now, 300 billion would last you 82,000 years. So that's the kind of money that's being thrown around. And if you see both the stocks and the bonds getting jittery and kind of floating up and down, now there's an understanding as to why, okay? All right, let's dive into what we really want to talk about today, which is property taxes. So property taxes across the country seem to be on one direction and one direction only, and that's upward, okay? So property taxes are quietly redefining affordability, and I want to show you this map. So anywhere between 27% in some states and 45% in others. We're up here in Washington State, that's 29%. So 29% of Washingtonians on the average, principal, interest, taxes, insurance, they have a whole payment, so let's call it $1,000. So in this case, out of that $1,000, $290 of it is going to cover insurance and tax that are doing nothing but going up. Now, where's the danger here? Well, the media will have us screaming and yelling that people are going to get foreclosed on as a result of this. I don't think that's necessarily accurate, but I do think we have to pay attention to it, okay? So taxes on the increase isn't a short-term blip. It just doesn't happen by itself. And unlike your mortgage payment, it doesn't stay steady. Even if you get a 30-year fix, you figure, hey, I'm good for 30 years, the taxes and the insurance can make a difference. And if they go up vastly, then all of a sudden your payment is really going to get affected, right? So if you're somebody who's buying a house with a very high debt-to-income ratio, please do yourselves a favor and be aware of the fact that these taxes can bump. And when they do bump, how will you have the offset to take care of that? Again, this is not, chicken little, the sky is falling. This is, let's open our eyes and see what's happening to make sure that we didn't get caught up in something like a foreclosure that will damage your credit and ruin life, etc., etc. Okay? So awareness is half the battle in this. We just made you aware of it. Please make others aware of this. New construction can offer a little bit more predictability. Why? Because right out the get-go for new construction, we're hitting it with an average of 1% of the sales price for taxes annually anyway, right? Sometimes folks go out and buy a house that's been around since the 1950s, 60s. A lot of times we see this, our clients will call and go, hey, this house only has a $250 tax bill. Well, no, it doesn't. That's what's published for you online, but that's because the person that lives there has a senior exemption. So be really careful with that. Property taxes can be appealed when and if you get your tax bill and it seems exceedingly high. You can do things like go out and get an appraisal, fill out the proper form, and fight that with the county. And I've seen them take a step back and fix that and lower that. And last but certainly not least, nothing replaces good guidance because it does turn complexity into clarity, just like we're doing now. So forward this to whoever needs to see it. Okay, what's going on in the marketplace? The CPI, the Consumer Price Index, measuring inflation at a consumer level, will come out tomorrow. That's going to be interesting to see. My guesstimate is going to be around 2.8, 2.9, somewhere around there. ADP employment report will also come out tomorrow. On Wednesday, we have the PPI, the Producers Price Index, inflation at a wholesale level, as well as existing home sales. That'll be interesting to see because we're seeing a trend of existing home sales going up during November. So let's see what happened in December. Initial jobless claims comes out, and that BLS jobs report expecting 46,000. That was last Friday, and it was left on here because I made a mistake. So leave that out of it. Nothing's happening on Friday that's noteworthy. As we jump into seeing what's going on with the rates that were 6.2 on Monday last week, 6.06. They actually were below 6 for just a blip on Friday before all the rest of this stuff happened. Remember, these rates are national averages. They're based on purchase loans, 25% down, 780 credit score. So visit with your person to make sure that you're getting the latest and greatest information, okay? All right, with that, please do hit all the buttons, subscribe, like, comment, share, so everybody around you can be as smart as you are, and we'll catch you on the next one. As always, we're just a phone call away if you need anything. Take great care. Have a nice week. Bye.